Good day and welcome to the Q3 FY22 earnings conference call of Rupa and Company Limited. We have with us today on the call Mr. Vikash Agarwal, President Finance from Promoter Group, and Mr. Dinesh Kumar Lodha, CEO, Rupa and Company Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. Actual results may differ materially. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikash Agarwal, President Finance from Promoter Group. Thank you, and over to you, sir.
Welcome everybody, and thank you everyone for being with us today. First of all, I hope everybody is doing fine and you are keeping safe and healthy during these tough times. To start with, I'll again introduce our company, Rupa and Company. We are one of the leading and largest knitwear brand in India, engaged in manufacturing, marketing, selling and distribution of men's, women's innerwear, thermal wear and fashion wear. We have our brand legacy of more than 50 years now, and very proud and happy to share that our group chairman, Mr. Agarwal, has been conferred with the Padma Shri, one of the highest civilian honors of the country. This is a proud moment for the group for recognizing his services and his dedication to the trade and industry. Coming to business updates, as we are aware, with a very strong, robust growth of financial year 21, with a top line growth of 35%, and EBITDA growth of 126% and PAT growth of 183%. We have done a double-digit growth in this quarter, Q3, which is of 25% year-on-year, with a gross margin of growth of 19%, EBITDA growth of 26%, and PAT growth of 34%. This brings our 9-month revenue to a growth of 19%, and with a EBITDA margin of 19.1% and PAT margin of 14% of 143 crores. Going forward, we stick to our projected growth of 18 to 20% on top line for this financial year, keeping a EBITDA margin of anywhere between 18 to 20% and PAT margin of 14%. Now I hand over the call to Mr. Dinesh Lodha, our CEO, for further numbers and details. Over to you, Lodha.
Thank you, Vikashji. And a very good afternoon to all the participants. I hope you and your family are in good health. I will share the highlight of our performance for the 9 months and this quarter, and following we will be happy to respond to your queries. Coming to the financial performance of the company for Q3 and 9 months under review, our company reported strong growth in third quarter. Revenue Q3 22 stood at 433 crore versus 346 crore, registering a growth of 25% on year-on basis. EBITDA has grown 26%, standing at 81 crore compared to 64 crore in the quarter 3 last year. Our EBITDA margin, as Vikashji said, 18.7%. PAT has moved from 43 crore to 58 crore, registering a solid growth of 34%. PAT margin is 13.5%. Revenue for 9 months ended 31st December 2021 is 1,019 crore as against 859 and 19% growth. EBITDA growth is 17% at 194 versus 167 crore, and EBITDA margin at 19.1%. That also on a 9-month basis we have grown 30%, and it is registering a PAT margin of 14%. As previously defined in our growth strategy, and every time we are going to say we are sharing that. So we are seeing a continuous robust demand on our all the products. The company has added multiple products in last 2-3 quarters on a trendy and stylish product, and also expanded the SKUs and sub-brands. Also, we have incurred the performance athleisure where we are seeing a good growth of 27-28%, and that's something we are seeing going forward. Also, there will be a solid growth coming in. The company is making inroads in our previously untapped category or geography, which I talked about, some of the geographical where we have weak earlier. Right now, we have grown 36% in the first 9 months, but on a yearly, we will be ending at 40% plus on these geographical areas where we feel that the growth potential is X factor. That is why it is called X factor, where the growth can be in a percent, not in a percentage, but X. So we are looking to grow this as we going forward more than 50% on year-on-year basis. And we have now done a lot of work to have the complete ecosystem in terms of building a team or building a network of retailers, distribution network, and the marketing to support that. In the modern trade also, we are seeing a very good growth on e-commerce, where we are seeing a registered growth of 26%, but by the year end, we will be looking this to grow at 60% because we are looking at a very solid Q4 on modern trade. Going forward, in response to growing demand for international market, we are intend to rapidly grow our export business. This year, we are looking to almost double our business from 20 crore to 38 crore. And going forward, we feel that this will be a huge growth driver for us. We are expecting 5x growth in this export segment in next 3 years' time. Government business also is a very solid opportunity, and we are started tapping in terms of new product introduction in all CSD and CPC. We are looking to grow 5x in 3 years there also, though the base is small, but the opportunity is huge. As we announced earlier, our basket of well-known large international brand of innerwear category FCUK and Fruit of the Loom, our foray into the PME segment will emerge into a separate undertaking. The potential synergy include cost saving in marketing, distribution expenditure, benefit economy of scale, and some duplicate expenditure. The demerger will also enabling managing the different funding requirement in terms of type of fund and also some of the infusion required. We have always committed to our long-term goal of providing the highest level of customer satisfaction with our product and brand, and we are very confident that with whatever we are doing right now, we will be hitting what we are committing quarter after quarter and year. On a Q3, our volume has grown 15%. On a 9-month basis, our volume has grown 9%. We're expecting this volume to at a similar level as we go forward to seeing, as we see Q4 at 19 to 20%, the volume will be again 12 to 14%. So we should be ending 10% plus 11%, nearly 11% on our volume growth. With that, I will be open to questions. Again, as this is our very proud moment for us in Rupa, as our chairman has been conferred with one of the highest civilian award, and this is a very proud moment for us. I'm sure all our partners and all very happy over that. So open to questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask a question may please press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Dhiral from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir, and congratulations for the good set of numbers. Sir, as you just said that our volume growth in Q3 was around 15%. So wanted to know, sir, how this has grown across the category?
So the growth is across all the category except the thermal. I think thermal is where we see some challenge this year, which is a flat sort of number. Otherwise, other than thermal, I think that across the category we are seeing a good growth. But some of the places where we have done a much bigger growth is one of the athleisure which we talked about. Athleisure is showing very good growth of 28-29%. But we are seeing across the segment except thermal.
And so how premium segment has grown?
So premium on M series, clearly we are seeing a good growth coming up. And as I earlier said, we should be ending the year at between 15 to 20%. But on the FCUK and FOTL, as of course demerger, I think this is the one where we are resetting the button from the point of view of the operating way. In case of Rupa, we don't do any SOR sale. Where in case of Oban, we used to do a lot of SOR sales. So we are changing the complete business model to get everything on a SOR model, outright model. And for doing that, we may have to take some material back which we have done this year, this quarter, and we have taken that effect in the quarter number. So that's something after the merger. I think the reset, I think we are all set to grow this business at a 30% plus as we go forward. But this year will be challenging in that product portfolio as we are changing the model.
And sir, how the women segment has grown for us?
So women, in a yearly basis, we will be growing by 25%, and a YTD basis, this is growing at about 17-18%.
Okay, and so lastly on the A&P side, what was the overall A&P that we have incurred in the last 9 months as a percentage of sales?
What is that? Can you repeat the question?
Advertisement and promotional expenses.
So promotional expenditure right now it is 3.5%, which will be going to go up to 4.5 to 5% by the year and 5% plus. So I think there will be a lot of expenditure will be happening in Q4 with the plan we have for summer. So that will be the case. And also our expenditure on social media has increased drastically. We are seeing a good traction on social media, and we are expanding there a big time in terms of oil as in-shop. So from TV to TV, I see the mix is changing from TV to social media and in-shop marketing a lot. And that is the reason also sometimes the cost is not incurring as much as what we incur on TV.
And so what explains the pressure on the margin?
Like as a management, we see a huge potential to grow in women's wear for us, at least 30 to 35% year on year. So we are going quite aggressive in terms of our product portfolio. And recently we have also engaged Kiara Dwani for our one of the major brands for women's wear, which is Softline. And we'll be starting the campaign soon for that. So
that's very interesting, sir. And so lastly on the margin side, so what explains the pressure on the margins? Because our gross margin, if I see, it is the lowest in last 4 to 5 quarters. So have you not passed on the full RM inflation, or is there any adverse product mix?
So most of the thing has been passed on. The impact on the cost on us is 0.3% right now. And we feel there is one more price increase happening on 15th of February. So overall, by Q4, our gross margin should be at what we are at a 9-month basis. So the quarter is specific. There is a 0.4% impact on that. Balance is mixed play because, as I said, thermal as a margin, which is always very high gross margin, that has almost flat or little negative right now, and that has impacted overall margin. So mix is playing balance gross margin.
And so what kind of price increase that we are looking to take?
We are looking to have about 3 to 4% price rise from 15th of February.
Okay. Thank you so much, sir.
But at the same time, yes, these are the challenging times of last 2-3 years with the rise in commodity prices, availability of raw materials and all. But yes, we are managing the show. So things are going fine with us. Fine for us.
Okay. Got your point, sir. Thank you.
Thank you. Our next question is from Ishrat Khatri from Omkara Capital. Please go ahead.
Hi, good afternoon, sir. So I think the previous participant did ask on the gross margins, but I just want to get some more clarity on that. So if you see the margins, in the last 2 quarters, our gross margins really escalated to 60% plus. Right, and that was primarily because of some inventory gain that we were getting, in the inflationary raw material price situation. And this quarter, I see that there's no inventory gain, which is why the gross margins have kind of come down. So is my understanding correct?
Not really. As I said earlier, the impact on the gross margin, particularly this quarter, has 2 reasons. One, as I said, 0.4% has the cost impact in terms of cost rise, and we have our idea was to price rise by December actually, which has delayed to February. So that has an impact on the margin 0.4%. But balance 1.2 or 1.1% is primarily driven by the mix. As I said, thermal, we have a very good Q2, but on Q3, I think we are seeing a dip in the thermal business because the whole thermal, this time has delayed. The season itself has delayed, and that has impacted overall thermal business. So that is the reason the mix is playing here overall.
And in thermal, we have a huge gross margin, so that is not building.
Okay, got it, sir. Another question is that despite a Q1 increase of about 18% in the top line, the operating expense actually declined by about 5%. So can you please explain that? I think that's the reason why our EBITDA margins are not impacted as much, despite the significant decline in the gross margins on a Q1 basis. So just wanted to understand why are the operating expenses more or less flat or actually declined despite an increase in the top line?
That is driven by advertisement cost, as I said earlier, and the advertisement cost will be offset in the Q4 because we are expecting a huge expenditure on the Q4 onward on the summer, because that is where the whole expenditure will be taking place, including what Vikas just said. We have a new brand ambassador, Kiera Advani, now on the women's segment. So we will have those expenditure coming out in Q4. And along with that, as I said, social media and the whole game plan in terms of moving from TV to social media also plays a role in terms of reduction in cost and has a high impact with the youths, because youths are more on the new mobility right now. We are seeing that something we are putting our effort also.
Okay, sir. Makes sense. Also, any light on the working capital for 9M? Because I think last quarter you mentioned that our working capital increased to about 770, 180 odd days. So just wanted to understand how's the working capital now, how the inventory levels. Are we stocking up inventory in anticipation of further price increase in the raw materials?
So we have a number of working capital days is 168. So that is from this, last quarter 179, we moved to 168. Having said that, we have built up inventory, which is a higher level right now because of the Q4 planning, what we are looking for, and we are looking for good growth there too. So though the working capital is 168 days, as we said earlier, we intend to go below 150 by Q4.
Okay, got it, sir. Thank you so much.
Thank you. Next question is from Prashant Kumar Hazariwala from Solitaire Financial. Please go ahead.
Good afternoon, sir. Hello?
Yes, good afternoon.
Yeah, good afternoon. Congratulations for the Padma Shri Award to the team and our promoter. So my question is, we have seen delayed winter, so we can see ramp up into our thermal wear product this quarter?
The voice is not clear.
No, we have seen a delayed winter, right?
That's right. We are seeing a delayed winter, and though the winter actually extended, but that does not help the business, because if once it's delayed, I think that in the mindset of the distributor and the retailer network will be to not invest in the thermal this year. So that has impacted the business. Yeah.
All right. So another question is what kind of gross margin we can expect going forward? What can be the range we can expect?
We continue to be at 35%, near to 35%, what we are seeing in 9 months' time.
All right. And, thank you for this. Thank you. If I have some other question, I will come back to you.
Thank you. A reminder to our participants, please press star and 1 if you wish to ask a question. Our next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. Sir, any kind of outlook would you be willing to share for next year, FY23, in terms of growth or margins, anything?
On the similar lines, we tend to grow 18 to 20% on the top line, keeping the EBITDA margin with around 18 to 20%.
Okay. Yep, thank you.
We see huge opportunity across all the sectors, whether it is men's wear, women's wear, kids wear, thermal wear. There is huge opportunity. Other than online, export is booming up. So there's a lot to be done, and not too many opportunities are around.
Okay. So nice to hear that. Yep. Thank you so much.
Thank you. Our next question is from the line of Kirti Jain as an individual investor. Please go ahead.
Thanks a lot for the opportunity, sir. Congratulations for good performance. Sir, first of all, I would like to thank you also for the interesting slide you have put in the presentation with regard to the 5 focus area in slide 23, to be more precise, where you highlighted the 5 focus area. Sir, if I try to do the other way around of the slide, so in the core, if you have to grow in the core market, you have 18 to 20%, then you have to grow at 12 to 16% range, sir. So what were the levers which will help us to maintain our 12 to 16% mark in the core market and core product category? How we will grow? Can give some insight on that. That would be great.
So the high potential area, we have taken a baseline of 235 crore, which is we have in last year. And we're expecting to grow 40% plus this year. But going forward, we're expecting that to grow at 50%. So that will give us a cushion to have other markets to grow at 12% to give us a return of 18 to 20% what we're looking for. So I think this particular area, though 50%, the opportunity lies is much more. As I said, 5x in 3 years in export. Now this 50% may not be good enough. We have to grow further, faster. And I think the opportunity lies there to make it happen. And we have now put together a team. We are putting together investment on those sides to make that happen.
Sure, sir. Thanks a lot, sir.
Thank you. Our next question is from Prashant Kumar Hazariwala from Solitaire Financial. Please go ahead.
Yeah, sir. Hello.
Yes.
Yes, please go ahead.
Yeah, so I would like to know, understand this demerger of Oman Fashions, like how it will work going ahead. So it will be a subsidiary of Rupa, or how it will be work?
So it is a part of Rupa now, right? It is not a subsidiary, it is a part of Rupa. And it has a lot of synergy, as I said during the presentation also, that a lot of synergy will be there, both from the management bandwidth concern, from the point of view of distributor network, from the point of view of cost of capital, and more importantly, in terms of our retail network. So it will be a lot of synergy which we will arrive out of that. And as I said, we are resetting the business to large extent because some of the models like SOR and all, in Rupa, we don't believe in SOR at all. And we believe outright because that is where the pain lies from the point of view of distributors or for the point of view a big LFS. Because once you SOR, the pain does not there. So I think we're changing the model to make sure that it is the right model on a long-term basis, and we are looking to grow 30% plus as we go forward after resetting.
So what is the current turnover of Oban, and what about the profitability?
This year, Oban, without taking the SOR into account, which we are taking return back, just on absolute secondary basis, we will be doing 25 to 26 crore. But as I said, we are looking this to grow at 30% plus year after year. And there are some changes we are going to do because a distributor network, what we have today and what we are changing in terms of adding this new distribution network will be where we will be arriving 30% plus growth.
The 25 crore is for the whole year, right?
Yes, right.
And on that 30% will be the growth.
Problem here. We need to set up things properly. So the idea of demerger was to have it under the main frame of Rupa only. So we have scale and a better scale and a larger team to look into. So it's a great synergy now onwards. So once the basic reset is done, we see a big potential here.
Right, so it will be considered as a subsidiary of Rupa?
No, it won't be a subsidiary. It's a part of Rupa then.
No, currently it's, we are going to demerge this Oban Fashion, right?
Yeah.
So demerge from where? So it is currently considered, all the financials are considered in Rupa, right, currently, right? And then it will be considered separately kind of thing, right?
Yeah.
All right. So what is the profitability currently from Oban?
So Oban at a secondary basis, our profitability at EBITDA level will be flat, and on a PAT level, we will have a negative on the interest cost, what we have separately incurred on Oban till now, but now with it will be part of Rupa, so the interest will not be showing up separately, flat.
All right, sir. And after all this restructuring, when will we consider it can come to the profit after tax level, let's say?
It will be running from next year profitably from the EBITDA, positive EBITDA of 10 to 12% to start with, and as we grow the business, the EBITDA percentage will be at par with Rupa in next 3 to 4 years time.
All right. And what will be the range of this product, like what will be the range of this product, like 400, 500 per unit?
The 5% higher than what is sold in M series, or for that matter, what you see in the market for product for jockey. What CUK is something which is a middle path, much higher than the premium what we available in the market. So it is 30% higher than jockey price in that sense.
MRP value-wise, FCUK will be 300 plus, and FCUK is around 200 250 plus for us.
Yeah.
Still, it is not a premium product. Like when we go for jockey, it's that premium product is around between 400 to 500 rupees per piece, right?
Depend on the product what you see. Here the product range starts from 200 and go up to 2,999. What Vikas is saying average. So jockey, if you see the average, it will come down to 200 something. And this will be little higher than that, and the FCUK will be range of 40 to 50% higher of what jockey will be.
So when I was looking for the product for Macroman, right, online, I couldn't find that high priced product on anywhere, right? Even our website Rupa online, I couldn't find any product. Right? So how is this
online portal for that, which is macroworld.co.in, where we have both Macroman and Macro Women. So it's not on the main Rupa online portal.
So, but the Rupa online doesn't have much product on it. Like, so why we are running this website for what? I don't know. Because just now,
where we take Rupa as umbrella brand for Macroman M series, because we are pitching it against all premium category. We don't put under this as a Rupa banner, as a Rupa brand. But of course, as a part of Rupa company, it's a part of.
Even other brands, I couldn't find much of the choices on our website.
We have full range there.
We have full range.
For range story, we have full range there.
You can, I think you just have a look. I think you will get full range.
Maybe you need to have a proper link. Later, probably they can share a proper link with you.
All right, it's a Rupa online store.com, right?
That's right.
Yeah.
Right. So that is where I was.
You can have a discussion offline on this particular point, but there are always.
Yeah, sure. No problem. All right.
We have a strong team. We have a strong team now to focus on this. So we see it as a great an opportunity. So we have a full focus on this as well.
All right. I would like to tell you that you should amp up this website, and we can have some advertisement for this website too. Right?
We are pushing more on digital. We are doing more digital marketing. So we are getting aggressive on this front as well.
Yes, sure. No problem. Thank you very much. Have a good luck.
Thank you. Any participants who wish to ask a question at this time, then please press star and 1. Our next question is from Devanshu Bansal from Emkay Global Financial Services. Please go ahead.
Yes, hi. Congrats on good set of numbers, and thanks for taking my question. Sir, I just wanted to know what would be the brand-wise contribution for 9 months FY22 for brands like Softline, Premium Segment, Economy, Thermal, etc.
So I will just give you more on women and men. I think that so we will have women about 11 to 12%. Men will be about 82 to 83%, and kids will be about 5%. That sort of things will be there.
And if you can divide it between Economy, Premium, and
Economy is 31, 32%. Mid premium will be about 60, and the premium will be 8 to 9%.
Okay. Sir, I wanted to put a request also, since your peers have started disclosing segment-wise details as well as the volume growth, etc. So if you could also consider this request in your PPT, then it would be really helpful to analyze your company.
We will look into that.
Thank you. That's it.
Thank you. Our next question is from Dhruv Kashyap as an investor. Please go ahead.
Yeah, thanks. Firstly, heartiest congratulations to Prahladji for winning the Padma Shri. Very well done and well deserved. I would also like to really congratulate and thank both Agarwalji and Lodha Saab for the absolute stellar stewardship that you've been providing to this company in such tough times. My first question, sir, is that if I was to simplify the brand product pyramid, really speaking, there is an economy or an entry segment in Rupa, John, Softline, etc. In the middle is Fruit of the Loom, and at the top is FC UK. I understand macro man and macro woman come somewhere in between, but I'm just trying to simplify it for my understanding. Now, to me, that seems that you're the only apparel or innerwear company in India which has such a laggard portfolio. Neither does Lux have a top-end equivalent of FC UK, and neither does Jockey have a bottom equivalent of John. So isn't that a tremendous opportunity for our companies? If you could shed some light on how you're really planning to explode this game in terms of product mix, advertising, marketing, distribution. Just give us some color on how this execution will come alive to really make us probably a numero uno sort of innerwear or apparel company.
So I'll take this up. The reason of having different brands for different categories, this is what we are doing from very beginning. And as a management, as a group, we strongly believe India as a country, as an economy, has a very strong demand across all the TGs, whether it is economy, premium, super premium, whatever. So why we are investing into different brands is like for a price point of a premium, like Jockey is coming into economy range also. So I believe for long run, a different brand catering to different segment will give you a better result as a consumer perception or as a consumer awareness, consumer demand. So this is how we are investing into different brands from very beginning. And we are quite confident across all the segments across, either it is economy, premium, super premium. So as a management, we have full focus across all the segments, and that's why different brands.
So my question is more on getting some color on the execution of Fruit of the Loom and FC UK in terms of the times to come on marketing, distribution, product mix, just to get a sense that how are we going to play it out executionally to win this game?
So I think on the premium side, we have 3 products right now, which is playing on the premium or super premium. One is our own in-house M series, which is 100 crore plus brand now. This year we will be ending at 115 or so crore. So that is something where we have a very large distribution retail base, and that is driven through a retail channel altogether. With a retail channel of 10,000 to 15,000 network where we have selling this product. On FCU and FOTL, as it was standalone till now, we see that we have missed a lot of synergy what we could have done earlier by merging along with the common channel of, let's take example, what we have in M-Series. So going forward, we are seeing a lot of synergy as well as a lot of product addition opportunity. As I said, FCUK also has the opportunity on other segment, outerwear and all. Till now, we have only few products which we have launched in the FCUK, and we see a huge opportunity to launch multiple products as we go forward. Same in FOTL, we are seeing women are doing pretty well on the FOTL business, and also the men where we are seeing a lot of opportunity. So as I said, the idea will be to increase our base of retailers right now, which is very small, 2,000 almost accounts what we have, but we are moving towards to have 7 to 10,000 accounts in terms of retail chain in next 2 years time, and that is where we are moving faster in terms of product portfolio, and also with the bandwidth of Rupa now, where I will personally able to spend time also on the product directly, as well as we getting the management time from the promoter side. I think we should able to get this business to a very next level, and we don't want to overcommit to you guys by saying doubling the business next year, but just saying 30%. But we all know the opportunity is much bigger than what we are talking here.
Great. My second question, sir, is in terms of focus markets or foray into markets on that sort of pillar of the strategy. That my understanding is that Rupa is extremely strong in the east. It has some pockets of strength in the west and the north, and it has a fairly large untapped potential in the south. So can you give us some color on the execution mix to make us a pan-Indian brand?
So see, every region in the pockets we are weak, in the pockets we are strong. In north we may be very strong in Rajasthan, or we will be very strong in Delhi, but when it comes to western UP, within the north we have a very huge gap, where the market is almost 10 times than what we are doing, and the opportunity 10 times than what we are doing. So it will not be like that area-wise only we have strength, but within that space there will be strength what is missing. In case of Maharashtra, we are doing very well in Bombay, we are doing very well in Pune market, but when it comes to rest of Maharashtra, like Nagpur belt or Vidarbha belt, complete Vidarbha belt, or for that matter, Solapur, Kolhapur, all the belts, we are not doing great. So I think we have gone through market very deep understanding and deep, data driven, in terms of understanding where we are weak, which socket we have to go after, and accordingly we have identified now these 8-9 areas rather than states where we have a potential to grow. Maybe what we are talking here is still 3x in 3 years, but I think the chances are that the potential is far bigger. At MP, we have to grow maybe 10 times in next 1 year time, but we have grown this year maybe 3 times only. That is not good enough. We have to grow maybe 10, 12 times by next year. So I think we have, area-wise, we have identified where we have to go after. We need to build a complete momentum. We need to build complete team. And even in South also, again, we are very strong in Karnataka, we are very strong in Telangana, but when it comes to Andhra, when it comes to Kerala, when it comes to Tamil Nadu, we are weak. So there is a lot of study and a lot of work has gone into the whole exercise, and we have gone into each of the distribution network of the strength of each of the companies, and then we have drive our strategy.
Perfect. So my last and final question is on exports. Now I understand that we are currently doing about 20-25 crores of exports, and we are looking at 5x, which is 100x, which is 100 crores, sorry, eventually. Now my question, sir, is that, whether it's the Middle East or it's, USA, Singapore, Russia, 2 things. One is that how are we going in there? Are we going in there as as supplying to someone? Are we going in and setting up our own brand and hence distribution, marketing, etc.? And secondly, while the ambition of 5x is good, but don't you think given the number of countries and all we are going to, 100 crores seems like quite a small number?
No, that's true, and I just said we believe in committing and delivering or delivering a little more. Our idea is we want to have our own brand in most of the countries. We don't want to have basically driven only by contract manufacturing, because the stickiness in the contract manufacturing is very difficult to get. So one of the things which we are trying right now, a multiple market where our own brand is where we are selling, and that stickiness is much higher and long term. So to your point, yes, there are opportunity of doing a lot of contract manufacturing others, but we are actually working hard in terms of building our own brand in some of the select countries by investing in the team as well as on the network. So yes, opportunity is far bigger, as you rightly said, and inside also we know that we have bigger opportunity. Like this year we are looking to 38 crore from 20 crore, which is 90% growth. At this rate, if you grow 3-4 years, we will do much bigger number than what we are talking here. But let's see how things move, but this is what it is right now, and we can better it as we go forward, and we can always revise.
Idea is not to stop at 100 crore. That's the first milestone.
Correct. Thank you so much, Dineshji, and because as I said in the beginning, a big thank you to both of you for the kind of stewardship that you've provided in these tough times and really led Rupa to be, a company where we investors are very proud of it. Thanks all.
Thank you. Thank you so much for all your support.
Thank you. Our next question is from Nitin Khankar. As an investor, please go ahead.
Hi Dineshji, I understand that the organized sector has been taking market share away from the unorganized sector in our segment for quite some time. So currently there are like 6-7 national level players with strong brands. Based on the advertising spends of all the players, would you say that all these brands are now competing against each other rather than against the unorganized sector? And what is your estimate of the current share of the organized sector, and where would it be in 3 to 5 years? Thank you.
So this is very difficult to say what exactly the number look like, but normally the 60-40 is the ratio of organized and unorganized. As you rightly said, I think post GST there is a shift from unorganized to organized, but I think going forward, I think this is already a plateau, and now it will be a sort of growth both the sides it will be there. I think the movement has been done, and there maybe some more movement will be there, but I think post that it will be plateau. As far as competition, yes, always the brand will compete each other, and that is something not new. I think it is always there. I don't see there's something a new trend. It always will be like that. But the opportunity is the market will expand now onward further with all outerwear and other stylists and all. And what we are seeing also surprised that some of the products like our Bumcham brand is not taking share from the traditional competition, but we are taking some of those competition like Reebok and Nike. There the product what we are now offering an athleisure will be competing going forward, and we are trying to see whether we have a product line which can compete those guys also. And there we see a huge potential, like because you said athleisure or outerwear, both will have huge potential. So I think it will not be just taking share from each other. There will be a potential to take some of the share from other side as we move more towards the outerwear and not just beside the innerwear. I think those share also will be coming.
And that is valid only for probably only the economy range. Shifting from unorganized to organized, not for your mid-premium or premium range.
Thank you.
Thank you. The next question is from Namit Mehta from KC Capital. Also, participants are requested to please enter *1 if you wish to ask a question.
Hi, congratulations on a great quarter. Just a couple of questions from my side. One, if you can talk a little bit about the transformation of your distribution channel from wholesale to distributor-led, and if you can discuss that both, quantitatively in terms of how many distributors you've been able to push from, wholesale to direct, and also qualitatively in terms of how you're able to lead this transformation.
So what we are trying to do actually, some of the new areas, the geographical where we are expanding, we are trying to have direct distributors. There is not much of wholesaler. This distributor had direct retail chain. So most of the places we are now expanding, which is a new geographical expansion, that will be the case. We are also, some of the market we are doing some change from what we have, but some of the market will continue to be in terms of wholesale mode. But as we go forward, I think this is changing as the new geography I talked about. And the product like M3 is a completely directly retail chain basis, and where we have network or the retailer chain basis where we are tracking each retailer, what is the final outgo is happening from our distributor through our CRM tool. So I think it will be a mix of all the three. In case of M3s, it is at the retailer level focus. In case of new geographical, it is distributor retailer level focus, and also traditional states like Bihar and all, it will continue to be dominated by wholesale. But we will see where we are also looking new areas where we can have more distribution base.
Understood. And the second question I have is that, today the online penetration in this category is quite low, probably less than 5-10%. How do you see this going forward, maybe 5-10 years down the line? Do you see the share becoming 20, 30, 40% like some of the other apparel categories worldwide, or do you still see it being a largely GP and LFS driven category?
I think, one of the challenges is a hygiene factor, and we need to be very careful on that when we deal with the e-commerce. And one of the conditions always we have that hygiene factor has to be utmost taken care by all these partners. Having said that, we are also working dedicated product only on online channel, and we will be announcing soon some of the product portfolio which will go to online channels, which will have no hygiene problem. So we feel that this will become 10 to 12% of revenue in next 3 to 4 year time. I don't see this become 20-30%, but it will definitely 10 to 15% from 2-3% what we have today. But opportunity is strong, but we need to be careful on hygiene factor, which is where a lot of problem arise when you start doing push too much, and then the pricing get eroded, then you have impact on the whole retail chain. So just that is one thing which we are very, very careful.
But then what prevents this from going to, that 25-30% number? In some other apparel categories, we've already started seeing that shift, worldwide that shift has happened even faster. Why do you think it will stay at that 10-12% rate?
But in India, if you see, none of the apparel has more than about 10%. We are not aware about any brand which has a contribution of more than 10%. So as of now, our contribution is just 2%. So our first milestone, once we achieve 8 to 10%, gradually the way economy is growing, it will gradually grow. But at the moment, we see 8-10% to be our first target in near future.
Okay, got it. Thanks so much.
And also the tendency of discounting product is very high in these channels, which we are restricted to those guys that they cannot, because we don't want to disturb our prime channel.
which is possible for any online exclusive brand. They can go for discounting up to 30-40%, which we can't. So we are building up a separate strategy for that, and our first target is to have 8-10% in near future, in next 2-3 years, and after that probably we'll look for a higher percentage.
Wonderful. Thanks so much.
Thank you. Our next question is from MS Rajshekhar as an investor. Please go ahead.
Good morning, sir. Congrats on a good set of numbers. I'm seeing that as a company, Rupa is now transforming to an excellent, bigger company. All the best for you. My question is, you are investing on the IT infrastructure. Have you completed that? And how is it helping in your journey forward?
So we have invested heavily on latest advanced AFF system, which is Advanced Asset Management System. This is under implementation through PwC, and we are expecting this to run from Q1 because mid of the year it will be difficult to implement that, but a lot of work has been already done, testing has been done, so we're expecting that to be Q1. It will help in complete in terms of transformation, in terms of planning, both inventory planning, in terms of ordering, in terms of CRM Connect. So all the 3-4 areas which is going to impact, and overall I think it will help both on working capital as well as the speed of execution.
Oh,
at the same time, we are spending a lot on the DMS, on the SFA for better management of the sales team also. So either it is backward or forward. So we are ensuring we have the proper technology in place.
Correct, sir. And then in between, a couple of calls back, I think you were informing that you were also revamping your management team. You were recruiting a lot of people. As your entire management team now in place for your next leap forward journey?
To a great extent, yes. So we have export head with us, we have a production head with us. At the same time, we are looking for somebody who's very strong with technology to drive our digital business to a next level, which is more futuristic. So that's the ongoing process.
And also we have increased our bandwidth in the regional level.
Yeah.
In the various regions where you want to expand, you have expanded your team?
Yeah, we have a solid team in place now, regional
sales team. Yeah. We are investing heavily on the sales team.
Okay, sir. That's all, sir. That's all from my side. Thank you very much.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference over to the management for their closing comments. Thank you, and over to you.
So thank you everybody for all your time and your feedback. We look forward to continuously interacting with you for more feedback and any concerns you have. And definitely as a management, we are quite hopeful and as a segment, as an industry, as a sector, to grow at least 20 to 25% year on year. To be conservative, at least 18-20% for next 3-4 years. And any suggestions, any feedbacks, we would be happy to connect offline. Thank you again.
Thank you.
Thank you very much. Ladies and gentlemen, on behalf of Rupa and Company Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.